You check your portfolio every morning. Apple, Microsoft, Nvidia, the usual suspects. You think you're diversified across different companies, different sectors. That's not wrong, it's just catastrophically incomplete. Because there's one company you've probably never heard of that controls whether every single one of your tech holdings lives or dies. I've spent years tracking what the smart money actually does, and here's what shocked me. Taiwan Semiconductor Manufacturing Company, ticker TSM, makes the chips that power literally everything. Your iPhone? TSM. Your Tesla? TSM. The AI revolution everyone's betting on? TSM makes the processors that make it possible. This isn't just another tech stock, it's the bottleneck for the entire digital economy. And right now, trading at $419, it's down 3% this month while sitting on one of the most fascinating risk-reward profiles I've ever analyzed. But before you even think about what this means for your money, you need to understand just how deep this rabbit hole goes. Here's the reality that keeps every major corporation's CEO awake at night. TSM controls roughly 90% of the world's most advanced chip manufacturing. When Apple designs the A-series chips for iPhones, they can't make them, only TSM can. When Nvidia creates those AI processors that everyone's going crazy over, they have to come to Taiwan and essentially beg TSM for production capacity. This isn't like having multiple suppliers for car parts or clothing, this is a true technological choke point. The entire $3 trillion market cap of Apple depends on a company based on an island 100 miles off the coast of China. And that geographical detail? That's where this story gets really interesting. Let me paint you the picture that has institutional investors salivating. Every car now needs dozens of chips. Every data center running AI needs thousands of the most advanced processors. Every smartphone, laptop, and smart refrigerator adds to the demand. And here's the kicker, building a new chip fabrication facility takes 3 to 5 years and costs over $20 billion. TSM isn't just ahead, they've built an economic moat so wide that even if China, the US, and Europe each spend hundreds of billions trying to catch up, TSM will still be years ahead. The company is essentially collecting a tax on the entire technology revolution. But here's what makes this investment thesis terrifying instead of just compelling. This is where my analysis gets uncomfortable, because we have to talk about the elephant in the room, Taiwan. Every major government considers TSM a national security asset, and Taiwan sits right in the crosshairs of US-China tensions. If you think the chip shortages during COVID were bad, imagine what happens if geopolitical tensions escalate. TSM's stock has swung from $223 to $479 in the past year partly because investors keep pricing in and out these tail risks. The company is trying to build fabs in Arizona and other locations, but that's years away and incredibly expensive. Right now, your TSM investment is essentially a bet on continued stability in one of the world's most sensitive geopolitical regions. And that brings me to what the smart money is actually doing about this dilemma. Here's what's fascinating about TSM right now. Our institutional tracking shows no major 13F holders being reported yet, which tells me either the data is still coming in or institutional positions are more fragmented than usual. What I am watching is the price action. TSM has pulled back 3% this month even as AI demand continues exploding. That could signal profit-taking after the run from $223, or it could be smart money getting nervous about something specific. The key inflection points I'm monitoring are TSM's capacity utilization rates, their Arizona fab progress, and any shifts in US-Taiwan policy. When institutional holders do report their positions, that's going to tell us everything about how the real money is positioning for these risks. Here's my read on TSM. This isn't a normal stock pick, it's a macro bet on technology, geopolitics, and globalization all wrapped into one ticker. The bull case is extraordinary: irreplaceable technology, unstoppable demand, and economic moats that would make Warren Buffett jealous. The bear case is existential: geopolitical risk that could reshape global supply chains overnight. At $4.19, TSM is trading somewhere between those extremes, and frankly, that feels about right for the risk profile. What would change my mind? Either a major breakthrough in competing chip manufacturing that threatens TSM's lead, or a significant de-escalation in geopolitical tensions that removes the risk premium. Until then, this remains one of the most important, and most complex, investment decisions in the modern market. Look, I can't tell you whether TSM belongs in your portfolio. That depends on your risk tolerance, time horizon, and how you view geopolitical risks. What I can tell you is that understanding TSM is essential for any serious investor in today's market, because this company's fate is intertwined with every major tech investment you'll ever make. If you want the full data analysis, institutional tracking, and ongoing updates on TSM and other critical positions, check out nexusaicalls.com. And remember, this is educational content, not financial advice. Do your own research, understand the risks, and never invest more than you can afford to lose. The semiconductor industry waits for no one, and neither should your financial education.